Dividend Stock Talk. There you go. Uh-oh. Interesting. Hey, Doc's here. How's it going there, Doc? D. Harmer. D. Harmer Desk. Interesting name. Well, Rocky the Realtor. Back again. How's it going there, Rocky? All right. Who else we got coming tonight? Get ready to get started. What is today? Today is Saturday, right? Saturday. Saturday, 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 Saturday. And more likes can attract more viewers. Holy cow, with 13 people here. This is ridiculous. Terry, hi, buddy. How you doing? Get the laundromat. Hey, gotta do laundry somewhere somehow. I can do laundry myself. Just one of those things. Keep the progress rolling. Mike, hey, brother, what's happening? Hope everything's going good for you there, Mr. Mike. What do you think? BAC, Bank of America. Not even a hi, hello, how are you doing? We're just signing on, but right to the point. Bank of America. Well, let's take a gander. I'm thinking to myself, I couldn't avoid it. Seriously, couldn't avoid it. The chart jumped out at me saying, no, 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 no. I didn't even get a chance to take a look at the numbers. Let me tell you why. Well, take a look. Now, $39.70 for Bank of America. It may be a good deal, may not be a good deal. But that's the high of the year. Why would I buy at the high of the year? Okay, stocks go up and then they come down. Then they go up, then they come down. I'm looking for it to go up after it's come down. So I'm looking for the 30-day high. I'm waiting for it to come off the 30-day high, find a new 30-day bottom, and then turn to go to the upside. There's so many stocks out there. I can't buy all of them. Okay, I'll buy 4 or 5 a week. That's it. Okay, 4 or 5 a week. I look at what is paying its dividend, how consistently have they increased their dividend, and then how are the odds the odds and probabilities into my favor, so I can collect that 1%, safe, predictably, and consistently every single week. 1%. That's not much. I'm not asking much. Okay, I gotta go answer some of these questions. Outside of investing, what are your hobbies? I'm starting up a company that converts boats here in the state of Florida, Toronto, on solar electricity. So I get boats for free, basically, because nobody wants to repower a boat because the amount of money it costs. So once you take out all the internal combustion engine and crap and put all electric motors in there, and then you put solar panels up on the top of the battery bank, all the kind of stuff, it's like a free ride. You can live on the water free. It's freaking awesome. Oh, once you pay for all the conversions and whatnot, but it's freaking crazy. Anyway, that's my next adventure. YEP, yep. Macy's went up this week. Yes, it did. All my Macy's is gone. Walgreens. Let's take a quick look at Walgreens. Okay, now we know this is a big fat no because it's at the high of the year. I don't even want to bother looking at the numbers. Seriously, I don't. But let's take a gander at Walgreens because Walgreens last week found its bottom and starting to turn around. So let's see exactly what that chart looks like. WBA. Walgreens. Okay, it doesn't look like much by looking at it, but check out the chart. The high of the year was way over here last June. She drops to December, bounces back up, finishes up the year at what's at 27, and then falls all the way down to 16. I want to zoom into that section right there and show you that one, because she fell all year long. And what happened? A stock will go down to a certain point where the buyers, that's you and me, your cousin, your neighbor, all that kind of crap. We are the buyers and the sellers. We decide that, oh, hell no. Walgreens has been in business for over 100 years. They consistently increase their dividends. Why would I not buy it at 16 bucks? So apparently we found the bottom for Walgreens. So where's it going to go next? Well, it's the only other place you can go once you hit rock bottom. That's just my humble opinion. Do your own research, make your own self comfortable. What stocks do you like 10 years from now? Oh, Mark, good question. What happens if the stock doesn't rise to your strike? You keep writing covered calls past your entry. Well, of course you do, until it actually hits your target price. Okay, rule number one, never buy something you don't want to own long term. So if you're concerned with it going down, don't buy it. Okay, I'm showing you how to read a chart. See, because stocks only go up and then they go down. So why would you buy it while it's going up? Because it's going to reach a point where it's going to stop, turn around, come back down again. Once it finds that bottom, turns around and starts going up, that's when you jump in. I mean, yeah, have a whole bunch of stocks on your list, but buy it at the right time. What happens? Okay, Home Depot, it's buying, cool. Go see Walgreens store to understand where it goes. Yeah, I understand what you're saying. I do. They're getting a lot of flack lately, but how are they going to come out of it? Are they going to come out of it? Do they have plans to come out of it? The company's been in business for over 100 years. You have two choices: either it's going to continue or it's not. I mean, there's no other way around it. It's going to continue or it's not. So, what are all the signs telling you? What do you think about NIO? Actually, I don't. Mike, look at VFC. I'm in at 1184. Was thinking about just selling. All right, Mike, we'll take a look at VFC in a second. Let me write it down. VFC. And there was another one. NIO. Do I even know who NIO is? All right. Well, that being said, I still like Walgreens. Let's take a look at the last 30 days. All right. Look at the last 30 days. That got to tell you something. Okay, 30 days ago, we're around 18. Okay, our 30-day high is at 1881. Okay, she drops down and she finally found the bottom on Thursday. Thursday is officially the 30-day bottom, because Friday she went up. Okay, so where's it going next? Well, logic would tell you, coming off of a 30-day high, hitting a new 30-day low, well, is going to go nowhere else but up. But you never know. Well, it happens on Monday. That's why we check in on Monday as soon as the market opens. If I like WBA, why wouldn't I? 16 bucks. The 16 is paying 26 cents. That's 1.5% for the week. For Walgreens, they've been in business for over 100 years. They consistently increase their dividends, so why wouldn't I? But I would like to know a little bit more information. MPW, huh, Doc? Secretariat. I need to see another one or two greens. Yeah, I like two greens myself, personally. So I would wait and see what happens on Monday. If Monday she opens higher, then I would anticipate jumping on in. But you're right, I would like two. Some people like three, but I like two. Do you only buy dividend stocks so if you don't get filled, you collect something extra? Well, crypto didn't take you long to figure that out, and you've been coming here for days. This is not your first time here, but you finally got that. Kohl's and Gap have crazy high premiums this week. Yes, they do. That's why we looked at them last night, and we all agreed. Well, at least I agree that Kohl's and Gap look good. We'll take a look at those also. was in MPW and sold the 5-week, but was in the money. Oh, Mike, did you make any money off of it? I mean, that's what it all boils down to. And if you did, how much was it? 1%, 2%? I think I made, I don't even know what I made off of that company. See, you profited, so that's why we're here. Good deals. All right, did you read them and kind of anticipate where they're going to go? 4%, oh, Mike, you suck. You do, dude. 4%, awesome. IGT, I don't even know who IGT is. IGT. All right, IGT is right there. Okay, so that's Walgreens. Do you see what I'm talking about? Well, number one, Walgreens has been around for 100 years, okay? They increase their dividends consistently every single year. Well, if you read the news and you watch the news and you focus what's going on, yeah, you're going to see a lot of bad crap because that's all they focus on, okay? Bad news sells a lot better than good news. It's just the way it is. So ask yourself the certain questions, okay? What are the numbers looking like overall? Is it a good company to continue going with? Are they going to continue their history? How do you calculate the percentage? Okay, James, hold on. Both report earnings this week coming up. High implied volatility, Gap and Kohl's. All right, thanks, James. I appreciate it. How do I calculate the percentage? All right, RD2. Still in Florida. Yes, I'm still in Florida. I'll be here for about another month. Okay, gonna have a meeting with all the people to get the homestead situated. All right, WBA. How do I calculate the rate of return? You calculate the rate of return by what is your profit that you're getting, and how much did it cost you to get that profit? What is your rate of return? Okay, so usually when people buy stocks, they hold it all year long. That's not what we do. Okay, here I buy it and I'm out. I buy it on Monday and hopefully out by Friday. That's just me. Okay. Now, if you guys want to do the exact same thing, fine. But you got to ask yourself a few questions. First of all, number one, does it make sense to me? It does buying Walgreens, a company that's in over every major city in the United States. Buying Walgreens a good idea. Do I want to own it? What are they paying me this week? Well, this week at $16, it's $26. Now, if I'm buying it at $16.07 and I'm selling it at $16, well, I am losing 7 cents right at the top. So you take that 7 cents and you deduct it from the 26. So what is that? That's 19. So my actual profit's 19 cents. Now, I know 19 cents does not sound like a lot of money, but how much is 19 cents compared to the share price? Okay, so we agreed that 19 cents is going to be my profit, and I'm buying it at $16. Now, why am I not putting in 16.07? Well, I'm not putting in 16.07 because the 7 cents right here that I'm losing when I sell the 16s, okay, I'm taking it off of here, right here. Taking it off my profit. My profit is 26 cents, but I'm losing 7 right off the top, which I really don't mind losing 7. And I'm going to explain it to you in a second. Okay, if I'm buying it for $16 and I'm selling it, let's say I buy it on Tuesday because there's no trading on Monday. If I buy it on Tuesday at $16.07, that's what it's costing me. Now, I'm selling somebody a covered call, which means they have the right to buy it from me at 16 anytime from the moment they pay for that privilege, okay, which, by the way, I get instantaneously. That's what covered calls. You get that money instantaneously, okay. If I'm buying at $16.07, selling for 16, I'm losing 7 cents. You take the 7 cents right off of there. So when I'm trying to figure out the calculations, I go, what exactly is my profit? And on this situation, my profit would be 19 cents per share. So if I get 100 shares, it's $19. 1,000 shares, it's $190. 10,000 shares, it's $1,900. So on and so forth. However many shares you get 19 cents per share as your profit. But here's the good thing about it. Because if I'm buying it for $16.07, and I'm selling it for 16. Okay, yeah, I'm losing 7, it's a big deal, but I'm gaining 16 altogether. All right? No, I'm sorry, I'm gaining 19 altogether. 19 is going to be my profit, and that's for the week because I'm buying it on Tuesday and I'm selling it on Friday. If the stock stays above, that's the big if the stock stays above 16 by Friday. Okay, well, what if it doesn't? Well, so what? I still own a good stock at $16. I collected over 1% for the first week I've owned it. Okay? 2, you go to the next week. Well, what is next week's paying out? Okay, now, if next week 16 is paying out 42 cents, well, how does that affect my situation? Well, you deal with that on a case-by-case basis. When you buy a stock, great, you own it. Now you can do whatever you want with it. You sell a covered call against it, you're bringing in what's called a premium on a weekly basis. And that's why I only stick with weekly optionable stocks, because I can do it every single week. Okay, so this week I'll get a little over 1%. Next week, a little over 1%. So on and so on and so on. Now, if you're collecting 1% per week for each position you have, okay, now 98% of all my money is invested at all times, so 98% of what I have is going to increase by 1%. So if it's $100,000, 98%, so what's 1% of 98? It's $980. Okay, so that is a nice fat chunk of change for 1 week's worth of work, and I'm only doing it for 10 to 15 minutes a day. 10 to 15 minutes a day is less than an hour a week. So I'm collecting, if you think of it this way, however much money you have, divide that in half. You've got 50% rate of return per year. Okay, so it's a 50% rate of return per year. So if you have 100 grand, okay, you actually earn 500 grand. Okay, that's 50%. Okay, now you divide that up by 1 hour per week, and that tells you how much you earn for a week per hour. That's what I do. It's called the 10-minute trader for a reason. It's really simple. I only look at the stocks that are on the list for the week. Okay? Here's my dividend calculator. It tells me what stocks I'm looking at this week. And then I only look at those stocks. I don't look at these. I don't look at these. I don't look at those. Because they're not up for consideration. It's really that simple. Okay? If today is the 25th, Sunday, wrong month, and wrong year. Okay, I'm doing good, Jim. Here we go. May. All right, so if we're coming into this week here, this is all I want to look at. Baxter, eBay, Corning. That's just this list. Now, I got like 7 or 8 lists. Let's pull up another one just for the fun of it. All right, here's another list. Oh, look at this. Dow, DuPont. Ugh, I don't know some of these. Baxter, AGNC, Corning, QCOM, KGCS, Kellogg's, Home Depot, Goldman Sachs, and is that Valero? Okay, so I know all these companies. Those are the only ones I want to look at this week. I don't want to look at anything else. Because I want this thing simple, safe, predictable, and consistent. There's no way to possibly do. I miss some of these questions. Okay, oops. All right, Sirona buying back $400 million in stock back from Walmart. Good or bad? I have no idea who Sirona is. Okay, 400 million. I have no idea. But ask yourself this question. Okay, the American population is getting older and older, right? And you have this huge generation that loves their prescription drugs. Where are they going to get it from? Walgreens, Walmart, CVS. Those are the top 3 in the United States. The baby boomers, their numbers are freaking huge. Generation X, their numbers are huge. And what do they like more than anything? Prescription freaking drugs. How can you go wrong with an aging community? Healthcare, elderly care, what do you call REITs that cater directly to the retiring, what do you call it? Hospice care, weird shit like that. Because the biggest generation that this planet has ever seen is freaking geriatric now. Uh, you put lipstick on a pig, it's still a freaking pig. Call it what it is. The biggest population the Earth has ever seen is now geriatric. Okay, so what do they rely on? Old age homes, retirement crap, and their prescription drugs. Where do they get the prescription drugs? Walgreens, Walmart, CVS. Those are the big three. You can't argue with the numbers. They are what they are. So is Walgreens going to go out of business? I seriously doubt it. They've been in business for over 100 years. Okay, they've increased their dividends consistently every single year. So they're having a bad couple of years. So what? What's 2 years out of 100? Okay, they've been in business since the 1800s or the early 1900s. So what's the big deal? I personally don't see it. So you look at the chart, and the chart tells you what it is you want to know. Okay? The 30-day high was 1880. The 30-day bottom was Thursday. Okay? It is the bottom of the year. There can only be one bottom of the year. And you know what happens at the bottom of every single year? Oh, I wish I bought it at the bottom. At this moment in time. At this very moment in time, Thursday is the bottom of the year. It's never been this low all year long. Okay. For that to work, you have to keep your strike price at the $16 mark. What if it goes down only? Well, Crypto Z, that's an awesome question. It seriously is. Because could it go down? Yeah, it could. But it can only make one bottom of the year. Okay, where's that bottom? At this moment in time, there it is. Okay, so tomorrow, Tuesday, very next trading day, Tuesday, this thing's going to open up either above or below. Below, I'm going to have mixed emotions, and I can figure what the fuck going on now. Do you know what I mean? But if it goes to the green side, it's like, fuck yeah, that's the bottom. Because there's only one bottom and only one top. We've seen where the top is, okay? And it's not even close to the top. But we're actually the bottom of the year. It's never been this low all year long. It could very well be the bottom. We just don't know. We won't know exactly until Monday. Or just stays below $12.50 where you can't just collect the premiums until you keep lossing it up. Exactly, Crypto Z, you're catching on. But you're avoiding question number one. Never buy something unless you're okay with owning it long term. Okay, long term. And make sure you own it. Make sure you plan on owning it for long term, because you just might have to. Now, the longest I've ever held anything was 9 months. That was Kimberly Clark last year. I bought Kimberly Clark. She went down, and she stayed down. Then she finally came back up and hit my target, and then I was up. But I collected premiums every single week. Granted, I didn't get 1% every single week as the stock was going down. But for the most part, if you check my averages, I'm averaging well over 1% per week. And I have that for quite a while. Virgil Lee, how you doing? It's actually the bottom of the century. Holy cow, that's pretty cool. You have WBA? I don't think I have WBA, but WBA is on my list for Monday. Oops, it is now. All right, here we go. So, WBA is officially written down and circled. You too, Roger? I'm curious. I want to see where it opens up on Monday. Because if it opens up high, it's like, fuck yeah, that's a good signal. But that's just me. Not bad. It shows it going. Yeah, could be. You never know. You actually never know. And that's the beauty of it. It is just a game. It's a freaking monopoly. But, you actually use real money with this one. Well, it could. I'm down 8% on WBA. Oh, Roger, just hold tight. Okay? If this is the bottom, Okay, if you are down on your WBA, okay, so if you bought WBA up here or higher, and it's down here and you're a little bit low, be careful of what. Hold on a second. Open this up. Okay. Okay, here's at the money right now, 26. And that's it for the 16. Look at what the 1650 is going for, 8 cents. The 17 is going for 3 cents. The 1750, 2 cents. The premiums really aren't that great once you get out of the money. The premiums are only good at the money or in the money. Okay, and it might be confusing to some, but right now at 1607, the $16 strike price is what they call in the money. Like you may not, but then again, win some good hope. It's so mad. Wow, you must have really tiny keypad on that phone, dude. Hold on a second, I'm reading the next one. They say it's a very strong buy. Well, there you go. I don't know who they is, but it is Walgreens. Been a business for around years, blah, blah, blah. You heard the speech before. But it all comes down to what's comfortable with you. And you got to remember, always remember, rule 2. Never buy something you don't plan on holding long term because you just might have to. Number 2, never sell at a loss. It defeats the whole purpose of the game. So what if you have to hold it for longer? If you have to hold it for longer, you don't care because you bought it with the intention of holding it long term. If it hits your target within a week or two, great. Who's going to turn away? Nobody ever went broke taking profits. If it hits your target, great, take it. If it doesn't hit your target, hold on to it. Collect higher dividends and collect a premium every week. It's really not that difficult. They say a very strong buy. Yep. Plus, you get the dividends. Ooh, yes, that's right. The dividends are coming up. Okay, I was saying that too. Where you saying the investment of going up Monday? Well, we're going to talk about Tuesday. And I'm not 100%. I'm not predicting anything. I'm just saying, what does the data tell you? The data tells you you can only have one 30-day high. You can only have one 30-day bottom. Now, if the 30-day bottom was Thursday and Friday was an up day, well, the data is going to show you that, okay, bottom, starting to go up. It's got to go up somewhere. So Friday may as well be the first up day. Tuesday might be the second up day. We just don't know until Tuesday gets here. Okay, but the data says what the data says. Okay, so you go sideways a little bit, pops up, comes down, finds the bottom, and then retracts. That's all they do. They go up, they go down. They don't do anything else. Okay, I was saying where you're saying investment money. No, I wasn't saying that. And no, my keyboard is normal, but I've had TNT since 09. So you've been drunk for all that time? Cool. I have no idea what TNT means. Sorry. I thought TNT was some kind of alcoholic drink they have up in the Tennessee mountains. I don't know. Every new low has a prior new low. That is correct. Team, no sleep. Okay. I don't know where you get TNT out of that, but all right. All right. So, all that being said, that's Walgreens. Let's move on to the next one. The next one we're going to be looking at is Hormel. Did we not look at Hormel last night? I thought we did. From the 49X wallet. I have no idea what the 49X wallet means. Okay, but alrighty then. What did I say? Hormel. HRL. 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 Alright, we like HRL. Now, Hormel is another company. Are you in WBA? No, WBA is on my list for Monday or Tuesday. Okay, I sold my WBA a couple weeks ago. I like to buy just before the EX date. Gives me more sense of certainty. You got the chart looked well. I'm not looking at WBA at the moment, but the chart looked good on WBA. Your 30-day high bounce out for 30-day bottom, 1 day to the upside. 2 days to the upside is my ideal for jumping back in. Okay, once it goes down to a 30-day bottom, okay, 2 days to the upside, that's where I like to jump in. Do you trade in taxable accounts or retirement account? I trade in a corporate account. Total different story. Shibcoin, I own it. I have no idea what Shibcoin means, but I don't do anything with cryptocurrency whatsoever. So if you guys ever have any questions about cryptocurrency, I'm not the person. I don't invest in it. I don't suggest you invest in it. I don't do anything at all about it at this moment in time. Okay, I see. Well, there you go. Sorry. Hey, you're new here. Not that big a deal. All right, so we're looking at Hormel. Now, Hormel is one of those companies. It's been in business for over 100 years. Again, another 100-year-old company. Why do I like 100-year-old companies? No, it's a C corporation. C corporation, and then I got a trust and a couple of LLCs. All hidden away so that it makes it easier for me not to have to pay taxes legally. Legally. Do it the right way. Hormel, been in business over 100 years. They've increased their dividends to their shareholders for more than 5 consecutive decades. 50 years, 5 consecutive decades, every single year, higher and higher. I'm not talking about every once in a while. I'm talking every single year, higher and higher and higher dividend. It's called a dividend king. Hormel is a dividend king. Why the hell don't you have it? The only reason to not have it is it's the wrong time to have it, which this is not. Let's take a look at the numbers and let's take a look at the charts. Well, first of all, the number says 35.68, which I'm looking at the 35.50, 70 cents. If I take 18 cents off of there, I'm still over 50 cents, still over, whatever. Yeah, still over 50 cents, which is still well over 1%. Okay? Let's actually figure out exactly what it is. So to find out exactly, if I'm buying it at 35.68 and I'm selling it for 35.50, I'm losing 18 cents right off the top, right? Okay, 35.68, 35.50, 70 cents. I'm going to take 18 cents off of that. So, 70 cents. And I want to take 18 cents off of that. All right, so that means, my profit is going to be 52 cents per share. Profit is basically, what am I buying it for? What am I selling it for? What am I receiving? So if I add the 70 cents to the 35.50, I'm actually getting 36.20. Okay? So you add the premium, because you're collecting, that's kind of like a non-refundable deposit. It doesn't come off of the purchase price. Okay? It's just option consideration. Okay, I want to buy it for you. Here's my letter of intent. Well, letter of intent is cash dollars. Okay, so the premium. Okay, now I'm going to collect 70-cent premium. That's just for the privilege of buying it at $35.50. They're still paying $35.50. The 70-cent premium is kind of like free money. Here, I want to buy this. I'll be back on Friday to pick it up with the rest of the cash. That's kind of like what it is. I'm buying it on a Monday. Okay, great. Now I own it. Okay, now you want to buy it from me, and you're giving me 70 cents per share right now, right here, and you're coming to pick it up on Friday. So if the stock stays above $35.50, we'll come back and I'll take it away from you. If it doesn't come back, if it doesn't go higher than $35.50, well, then I keep it and I sell it to someone else the next week. But whatever happens, my purchase price is still $35.68. Just because I'm collecting 70-cent premium to sell it. Okay, I'm only collecting, how much am I collecting? All right, I'll divide this by the purchase price, $35.50. Now, why am I using $35.50? Well, because $35.68, I'm selling for $35.50. I'm already deducting that 18 cents off of the profit. So it's already there. 1.46%. Do I like Hormel and collect a 1.46% for the week? Well, it's not even a week. It's Tuesday through Friday. So if I buy it on Tuesday morning, this is what I can expect to pay. And if I sell someone the rights to buy it from me for basically the same price I paid for it, or close to it, I can collect 1.46%. But here's the thing. there's an opportunity, and there's a possibility where the stock can go down, and you have to hold it longer. So the question comes, do you like Hormel enough to play this game with Hormel? It's kind of like a game of chicken. I'm going to buy you. I hope you keep your value so that I can resell you, take my 1%, and move on to the next time. Kind of like, wow, that's a terrible thought. You you buy it, you get some money from it, see you in 90 days, do the exact same thing. It's like kind of, I don't want to say call girl because that's kind of cheap. That's a terrible way of thinking of it. But anyway, yeah. Okay. Do I like Hormel? Do I want to own it? I'm going to buy it, collect my 1.46%, get rid of it by Friday or the following week, collect that 1.4% per week. That's over 1% per week. That's over 50% per year. And you have to ask yourself, do I like Hormel? Hormel's been in business for over 100 years. They've increased their dividends for more than 5 decades. Why would you not have this in your roster? Especially when it's paying over 1.4% for 1 week. They got their dividend coming up. That's why we're looking at it. Hey, stocks have a tendency to go up just before the dividend. So if you know the stock moves up just before the dividend, well, why not buy it just before the dividend? If the chart tells me so. Really? Okay, if the chart tells me so. All right, so here we go. Here's the high. Got a triple high at 41.50 back in June and back in August. She falls to the bottom of the year, 27.80 in mid of February. She gaps up and then proceeds to go to 35.11, which is where she is at this moment in time. So the last 30 days. Take a look at the last 30 days. Okay, 30 days ago was the 30-day bottom. She went up, pulled back, Nice. Look at that escalation from the 6th all the way up to the 20th. Beautiful escalation. Oh, what happens after a 30-day high? You guessed it. You got another low, not a 30. I would prefer to see a 30-day bottom, a new 30-day bottom, but no. But it's still a bottom. 1 day to the upside. I like 2 to the upside before I jump in, so I'll be checking this one on Monday. I'm going to write that one down and circle it for Monday. Sorry, Tuesday. I like that one. So we're going to take a look at that one on Monday, Tuesday also. But go by the numbers. Okay, what are the numbers telling me? Because the numbers are going to tell you whether or not financially it's a good deal. The charts will tell you if the timing is right. Okay? Once you isolate the stocks that you like, because there's 9,516 stocks in the stock market, but only about 300 fit this category. 20 years of increased dividends and weekly options. That's 300 companies right there. Worst case scenario, you're going to get higher and higher dividends every single year. That's the reason why I only stick to companies that pay increasing dividends for 20 years or more, because I want to be reassured, whatever happens, that it continually increases every year. That's why. Also why the dividends, because most stocks go up just before the dividend is paid. Okay, there's only 4 dates you need to remember. The announcement date, the EX date, the date of record, and the payment date. When it comes to a dividend, now why do I like dividends? Well, let's just say I'm retired and I want consistent income. I want it predictable, I want it consistently, and I want it safe. I don't want to put my money up for risk anymore. I really don't. I've done 50 years of work in the workforce. Hey, I've raised 3 children. Great. I'm stopping the granddad thing. I'm enjoying the hell out of it. So I'm just sharing my knowledge here, but I do suggest you guys do your own research. Just because I say it's been in business for over 100 years and they've increased their dividends for over 50 years, check it yourself. Seriously, do your own research. It's really not that hard. The Dividend Kings, I think the 67 companies that have increased their dividends for 50 years or more, that's the Dividend Kings. The Dividend Aristocrats, same thing. They've increased their dividends for 25 consecutive years. They also have a very high market cap and over 5 million shares in float to be an aristocrat. Because the Dividend Champions also have 25 years of increased dividends. Okay? Then one more list, the dividend contenders. Consistently increasing their dividends to their shareholders every single year. Now, the contenders are about anywhere between 10 years and 24 years. Didn't quite make the 25-year list yet. However, hey, look at that. Mikey G just showed up. How many $1,000 of good stock would you buy? Joey, I divided up. Okay, I get 6 different accounts. I share 2 of them with you guys. Okay, now, when I buy my stocks, it's 20%, 20%, 20%, 20%. So 98% of all my money is invested at all times. Now, I've been playing this game for a very long time. I don't suggest you do the exact same things I do. I suggest you do some risk management. Okay, figure out what is acceptable for you. For me, I really don't care. I've been doing this long enough that I know what I'm doing. I understand what the risks are. And for the stocks that I do, I don't see there to be any risk. But that's me. Don't listen to me. I don't know what the hell I'm talking about. This is just for me. You guys got to figure out what is right for you. Okay, so do you trade options? Yes, I do. I love options. Next on our list, CRF. Let's take a look. Good look at CRF. CRF. Cornerstone Total Return. I don't know. What do you think? No options means a no. CRF is a no. But IBM is a yes. IBM. I don't know who suggested this one last night. IBM. Ooh, what a classic company. Look. She goes up, down, up, down, up, down, up, down, up, down, up, down, up, down. You know the routine. It's all it does. Have you seen any stock so far do anything but go up or down? No. Doesn't go in circles, doesn't make smiley faces, doesn't come home and do your dishes, doesn't do anything. It goes up, it goes down. It's all it does. Okay, the timing's got to be right. First of all, the numbers got to work, which means I want to make my 1% per week. So at 171, the 170s are going for 179, which means if I'm losing $1.05 on the top, not even worth it. Sorry. IBM, the numbers just don't work. Don't even have to look at the chart, because the chart doesn't look that bad. Okay, but the numbers just don't work for IBM this week. Okay, now IBM is one of those, it's a little fickle. It's a 50-50 shot. Okay, I don't buy IBM every single quarter. Now, I buy certain stocks every single quarter because the premiums are just so freaking fantastic. Okay? Now, let's go to the next one. On the list, FAF. Somebody suggested this last night. I've never heard of it before. FAF. First American Financial. Sorry, that's why I never heard of it. Never on my list because it's a monthly. I just don't do monthlies. Look up FL. The heck is FL? Oh, Foot Locker. You know what? I will put Foot Locker on the list. Okay? I do have a running list, and I try to keep it fair to everyone. So I will put Foot Locker on the list, and I'll get to it when I get to it. But right now, we're looking at Verizon. VZ. First thing I want to see is what can I buy it for? $49.72. The 40s is going for 15 cents. No, that's not 1%. No, why would I do that? A Cody St. Clair, BGFV. I have no idea what that is. And usually when I say I have no idea what that is, it's usually going to come out to now. But I'll entertain you to look it up anyway. B G F V. All right, we'll take a gander at it. All right, I might not get to it tonight, but we'll probably get to it tomorrow night. Because I only have a certain amount of time to deal with this stuff. It's 10 o'clock. Any resources on how you set up your corp, trust, or LLC? Ooh, you know, I never even thought of it that way. I probably could put together some resources on, because there is an IRS code that qualifies you as a trader, which means you got to trade 4 or 5 shares, 4 or 5 trades per day, every day. Okay, so if you're not willing to do that, you can't become a legal professional trader. Okay, but if you do set up your account that way, like a C corporation, okay, that way the trading account is in the corporation's name, which is taxed on a corporate level, number one, and number two, you are a professional trader, so you have deductions that you're allowed. It's something you really need to talk to a tax strategist about or a tax planner. But setting up, yeah, I see where that could be valuable. Setting up a set of resources of ABCs, how to do what I'm doing. It's not how to do something interesting. It is interesting because you don't have to pay taxes if you set up your trading in a certain manner. Okay, so if you're doing it strictly personally in your own personal name, well, yeah, you're going to pay personal taxes on it. Okay, but if you're doing it as a retirement account for a corporation, tax totally differently. Okay, if it's in a trust, tax totally differently. LLC, tax totally differently. Okay, there's another one. Unincorporated business trust. Ooh, now there's a good one. It's not taxed at all until you take it out. You can build it tax-free, but as you start taking it out, that's when it starts being taxed. But in a corporation, any kind of corporation, the profits are offset by the losses. So you need to talk to a tax strategist or a tax planner. But 50% per year should be motivation enough to say, you know what, this could be big. Some people, they trade hundreds of thousands, even the millions of dollars worth. So taking a little bit of time to set it up or moving into an entity where it eliminates taxes, eliminates probate, eliminates, what do you call it? Divorce court. That was what I'm thinking. Divorce court, yeah. So anyway, use offshore broker. Yep, that could be it too. BGFV says dividend yield 20%, but has been on a downward trend. I've been trying to find info. Oh, Cody, well, let's take a gander. Okay. BGFV is a Big 5 sports goods store. Really? Seriously? Do they have 20 years of increased dividends? Is it really worth our while to take a look at it? I mean, if it doesn't have dividends and consistently increase them, it's kind of not worth our effort. BGFV. BGFV. That's a big fat no. Quick, wasn't it? Big fat no. It's a monthly. It's $3.25. There's no way in the world that $3.25 stock could have 20 years of increased dividends. Still like MPW? Yes, Chad, let's take a gander at MPW. MPW. Actually, I go back to my list. I like MPW. I'm going to put it on the list for us to take a look at. I don't want to jump all the other ones. There's people that have been here waiting. But I will put MPW on the list. Maybe we'll get to it tonight. Maybe we'll get to it tomorrow night. All right. CVS is next. I'm going to go on the list. Okay, CVS. Very first thing I want to look at before I even look at the chart, because you don't have to look at the chart to see the chart, because as soon as you turn, you get, all right, there's the high, there's the low, there it was, there it is. That's the 4 things I look for. You can't not see it. Do you know what I mean? As I turn around, well, there it is. Here's the high, here's the low, here's where it was, and here's where it is. It looks interesting. But first thing I want to look at is the numbers. Are the numbers what I'm looking for? Okay, so 55.70, I want the 56s, and it's going for 40 cents. It is a no. Okay, and I didn't even need to look at the chart because the numbers just don't work. If the numbers don't work, there's no point in going through the effort of looking at the chart. All right, so CVS is a no. FL, all right, here we are, FL, Foot Locker. I have Foot Locker written down twice. Somebody asked to look at it last night. Very first thing, 22.40. The 22.50s are going for a $1.70. So that's not 1%. Wait a minute. Yes, it is. Sorry. I don't know what I was thinking. $1.70, it's $22. So it's 22 cents is 22 cents is 1%. So what's 170? That's more than 1%. Shit, I like those numbers. Let's take a gander. Okay, so if I go, I'm going to go for the 22s. All right, because it's $1.95. If I take 40 cents off of that, I'm still getting a $1.55. $1.55 for a 22. I can even go to 21. I can go to, well, no, 21. The 21.50s. The 21.50 ones look good. That's way in the money. Almost guaranteed to be called out, which is what I'm looking for. All right, so let's do the 22s, which is in the money. See what it looks. See what it comes out to. $1.95. All right, $1.95. Clear. Okay, so $1.95 is the premium that I'm going to collect. If I buy it at $22.40 first thing Tuesday morning, I now own it at $22.40. If I sell it at $22, I'm losing 40 cents. Okay, $22.40, 22. Okay, but I'm collecting $1.95 per share. So if I deduct that 40 cents that I'm losing off of the profit, the $1.95, okay, so I'm actually bringing in $1.55. Okay, so $1.95 subtracted by 40 is $1.55. That's $1.55 per share on a $22 stock. Okay, so I'm walking away $1.95, and I'm going to subtract the 40 cents that I'm losing because I'm buying it at $22.40 and I'm selling it at $22. Okay, all right, there it is, $1.55. That's what I'm walking away with. So how do I figure out my profit? I mean, how do I figure out my rate of return? Well, I divide it by the purchase price, the 22. Why not 22.40? Well, because I already subtracted the 40 cents out of the equation. All right, so divide it by the 22. Divide that by 22, and it comes to a grand total of, are you kidding me, 7%? I'm writing that sucker down. Well, before I write it down, I want to take a look at the chart. Okay, the numbers work very nicely. All right, so Foot Locker, the numbers work real nice. 7% cannot be right. Okay, let's say hypothetically we take it at $22.40 and we sell the 22.50s. We'll bring in 170. Okay, so let's do 170. 170, divide that by 22.40, because this time I'm not losing anything. Okay, and that's going to give me a grand total of 7.58%. You shit me, really? That's freaking awesome. I think I'm going to do that. And it's only 10 o'clock. Holy cow, we have another hour and a half to go. We're at 40. Let's reboot and start again. I like doing that. Get more people here. Don't go anywhere. $7.5%. That's nuts. Think about it. It's a little crazy. 7.5%. Hi, I'm James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks with weekly cash flow. Take you along for the ride for that same predictable, consistent 1% per week. Hey, guys, showing back up again. Woohoo! Awesome, awesome. Yeah, I don't like it when it drops down below 50 viewers, so reboot and they attract more people in. Alrighty, so thanks for showing back up again, guys. Let's finish up where we are. All right, so we're looking at Foot Locker. Now, Foot Locker, the numbers are just freaking crazy. $22.40 is the purchase price, okay? The last trade, $22.07. The bid, $22.05. The ask, $22.40. 2 million shares were traded on Friday. All right, so Tuesday, if I buy it at $22.40 and I sell someone the rights, okay, a covered call is basically selling somebody the right to buy it from you. It's kind of like a non-refundable deposit. I buy it on Monday, all right, so there I have it. I have it. You want to buy it from me? Good. Give me a deposit, a non-refundable deposit. Come back and pick it up on Friday. If it is over $22.50. If not, if it's not over $22.50, then I get to keep it. Is that a pretty good idea? I think it's a good idea. Look at this. We have more people here. How you doing, DC? Nathan? All right. Okay, so do you understand what I'm talking about? Foot Locker, well over 5%. Yes, that's on my list. But I want to take a look at the chart first. So what is the chart telling me? Well, the chart's telling me the high is here just below 36. Okay, that was in March. And the absolute bottom is right around $15. And that was in the middle of August of last year. Okay, so first thing I want to see, here's the high, here's the low, here's where it was a year ago, and here's where it is now. The chart doesn't look that bad, so I want to take a look at this one. New in this, viewed a couple of your lives, starting to understand. Well, Ricardo, awesome, glad you like it. I missed a couple others. Yep. Ricardo, cool beans. Which option strategy collects dividends? Oh, Alexander, you're new here. Sit, chill, absorb the information. Ooh. Yeah, anyway. All right, so anyway, Foot Locker. I like the 1 year chart. One, on the high, the low, where was it, where is it? Let's take a look at the 90 days. What has it been doing for the last 3 months? Okay, the last 3 months, okay, last 3 months. Here's the high, 35.50. Here's the bottom, was that 20.60? And it's right now, it's sitting at 22.07. Okay, so here's my high, here's my low. Well, what does that tell me? It doesn't tell me a whole heck of a lot. I just like to see the movement so I get a kind of idea of what's coming next. This is what it's done over the last 3 months. So what can I expect for the last 3 months? Well, we want to go back to the last 30 days. Okay, now the 30-day is showing us totally different. The drops, like in October, March, risk 7%. Mighty KC, I have no idea what you're talking about in this particular moment. I may have missed what you were talking about earlier, but that makes no sense to me at the moment. All right, what am I looking at? 30 days. 30 days ago, we're around 22.50. Bottomed out right around 20.50. Topped out, bottomed out the 1st of May. Topped out, what is that, the 8th? Friday on the 8th, on the 10th. Okay, then from there, pulls back up, pulls back again. Now she's going to the upside. But the overall trend is going towards the upside. So you got a couple of questions. Okay, one, the numbers look freaking excellent. Two, it's tending to this direction. Three, well, where's the options? Sorry, not where's the option. Where's the dividend for Foot Locker? No, that's L. I want FL. July. Holy cow. Foot Locker doesn't have its dividends until mid-July. What the hell are we looking at it for now? Don't get me wrong, numbers and everything else look pretty good, but it doesn't have a dividend for a couple more weeks. So we won't actually look at that until the end of June, which is what, 3-4 weeks away? Anyway, it is what it is, but the numbers look good. Let's see, seasonality. What does this thing normally do this time of year? Now, for those of you that aren't familiar with seasonality, the blue line represents the movement for this year. Okay, this is what it's done this year so far. The red line up here, this represents the movement that it does over a 10-year period. Okay, 2014, 15, 16, 17, 18, 19, 20, so on and so forth. This is the average of the last 10 years. But what I want to look at, I want to look at right here. Because this is today, right here. The next 2 weeks is right in this area. That's what I want to look at. So let's take a gander at it. All right, basically, what are we looking at? I think basically just going to go sideways. It's a slight down tilt in about 2 weeks. Okay, so 1 week you could be here, 2 weeks you could be here, slight down tilt, but basically just the sideways point. That's about it. Not a whole heck of a lot of movement whatsoever. You know? So when there's not a lot of movement, okay, it's not going to go anywhere, hypothetically speaking, of course. It has a tendency to drop almost 30% overnight this past year. Interesting. Are we talking about Foot Locker? All right. So if what you're saying correct, I'm not seeing any big drops. I mean, yeah, there's a big drop there, but to the upside, looks about right, and it drops into the upside. It basically looks like it does what every other stock does. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down. It's doing the same thing every other stock does. So whether it goes down 30%, it's showing up as normal movement. And that's what I'm looking for. So to get an idea of where it's going to be next Friday, because if I'm buying it on next Tuesday, okay, if I'm buying it next Tuesday at 22.40, selling it off to 22s, and collecting that nice fat premium, where do I think it's going to go by Friday? By looking at this chart, it would appear it's going to be in the 23, 24 area by judging the movement of the buyers and sellers. Because after all, we are the ones who decide which direction the stock is going to go. By us buying, the price goes higher. By us selling, the price goes down. Good point. It does come back each time. I just have to hold for a little while. Well, yeah. I mean, that's the idea. It's not. It never. Once you put a stock into your portfolio, okay. Now I have over 300 stocks in my portfolio. It never ever a question is, do I like the stock or do I not like the stock? If it's on my list, it's on my list. And once it's on the list, it's never, is it a good stock to buy? Well, yes, it's a good stock to buy, or it wouldn't be on my list. Okay? What does come up for consideration is it the right time? Okay? I time it specifically by the dividend. That's why I have this dividend calendar. Okay, that's why I have this dividend calendar. Every green dot here tells me a company that I've already pre-screened, and it's never a question. For me, never a question of, do I like that company? No, that's never a question in my mind whatsoever. What's in my mind is, okay, what's the chart telling me and what are the numbers telling me? Because I know they're here for a reason. They're here because in 2 weeks, it's paying our dividend. I want to buy this 2 weeks before it pays its dividend. I want to buy this 2 weeks before. Each one of these I want to buy 2 weeks before they pay the dividend because the stock has a tendency to go up before the dividend. Once it happens there, then I want to make sure, is the chart telling me it's the right time? It's never, is this a good stock? That's never even a question. Is it the right time? For what's on my list? You guys got to make up your own list. Oh, FL does not have dividend upcoming. Well, it does, but it's in July. Okay? I can't get your live to work. It's freezing. Leanna, this is live on YouTube, TikTok, Facebook, Instagram, and 2 channels on YouTube. So if you can't get it here on TikTok, you got Instagram, Facebook, and YouTube. Mighty KC breakers and the big ups and downs coincide with earnings. New York, and okay, whatever. Good night, Roger. Is there a service fee to buy and sell the stock? Joey, to be totally honest with you, that's really going to depend on which brokerage you go with. Okay, now I have several different accounts. I have some with Thinkorswim through Charles Schwab, and then I have some in Robinhood. I like Robinhood because it doesn't pay fees. I don't pay fees on it. Okay, I do pay fees on the Thinkorswim. The Thinkorswim has the larger amounts on it. They're just different trading strategies. But yeah, some do have a fee, and some don't. you have to do some research on which one's best for you. Alrighty, so let's go to the next one on the list. Next one on the list. The next one on the list, isn't ADM a no, or is that Archer Daniels? AMD and ADM. Which one was it? ADM. Archer Daniels. Okay, Archer Daniels is a good company. Been in business a long time. $60.70. We're looking at 61. Big fat no. Sorry. Archer Daniels is no. BF. Now, somebody wanted to take a look at BF last night, because I remember BF was last night. I kept saying, what the heck is BF? ASFAG. Yeah, that's a no. Next one was VLO. Ooh, Valero. VLO. All right, first thing I want to take a look at is 162.94. So the 163 is 162. I don't have a 163. The 162.50s going for 164. I'm losing 44 cents. We take 44 off of that dip. That's a no. Sorry, the numbers just don't work. Yeah, we did VFC. VFC doesn't work this time. How do you get the dividend calendar? Bubba 70. Well, the dividend calendar is under the Market Watch on Thinkorswim. Now, when I teach, I really prefer all my students to have Thinkorswim. Number one, it's free. You can download it. You can practice with it. Okay? And it allows the communication that much easier because there's so many different trading platforms out there. It can get really confusing really fast. And I've been using this one for over close to 20 years. And it's the one that has the most that I'm looking for my style of trading. I do a lot of dividend capturing. I do a lot of covered calls. I do a lot of spreads. I do a lot of research. So I like the charts. I like a lot of stuff this guy has. Okay, how do you get to that? All right, so the dividend calendar, it's right here. Okay, if you can't get it here, you can go to Google and put in EX dividend calendar. And you get a whole bunch of websites pop up. So finding a dividend calendar is easy. It's just finding one that you actually like and enjoy. I can go right from this calendar. I can right click on any one of these buttons, come down here, get the information. I'll show you right here. I can click on it right here, Ford. Right, Ford pops up down here, gives me all the information for Ford. I can right click on that, more information right there, and then I can go right to trade. I can actually go right to trade from my calendar. Okay, and it opens up my chart, and it opens up the trade grid, and it opens up the option chain. That's why I like this company, because it goes so smoothly from one to another. You missed, sorry, Mike. What do you think about NEP? NEP? I'm in at 1480. Mike, VFC. Mikey, let's take a look at VFC. I thought we looked at VFC earlier. VFC. Okay, VFC is at 1250. The 1250 is going for 14, over 1%. Okay. No, we didn't go with VFC because I don't remember seeing this tonight. All right, so Tuesday morning I can buy it for $12.50. The $12.50 is going for 14 cents. In case you guys don't remember your math, 14 cents is more than 1%. Okay, 1% of $12.50 is 12 and 12.5 cents. 12 cents and a half. 12.5 cents. Okay. So the numbers work. When are they paying their dividend? All right, VFC has its dividend right here on the 10th, which is 2 weeks away. Perfect timing. So let's take a look at what is it.
It's 9 cents. All right, not huge. But then again, the stock's only 12 bucks. All right, so
we have more than 1% for rate of return when we buy. Now we want to take a look at the chart. Some comments on the live. Filter okay. Blend board 12. So if you need 1200 for one call. Okay, that works. All right, so now we want to take a look at the chart. The high here in August, the bottom this week. Where was it? 18. Where is it? 1230. All right. Last 90 days. Look at the last 90 days. Got a high at 1650. She drops, pulls back, drops, pulls back, drops, pulls back, drops, pulls back, drops, pulls back. That's all they do. Drop, pull back, drop, pull back. Okay, so last 30 days. 30 days ago. 30 days ago here when we were 1270. Okay, got our 30-day high 2 weeks ago on the 14th. What is that? 1340. And Thursday, okay, your 30-day high, your 30-day bottom, one to the upside, one more. That's a perfect cue to get in. But let's see where this thing normally goes this time of year. Nothing but sideways. So that's perfect. I like that one. Alrighty, let's move this thing over a little bit. Alrighty, so I got my book out. I'm gonna write this one down. BFC. Wow, nice. Got some good picks for next week. Microsoft, MST, MSFT. All right, I got Microsoft written down. We'll take a gander at it. BMY, really? Bristol Myers Squibb. BMY. All right, we're going to check out now is AA, which is Altria. No, it was Alcoa, sorry. AA, Alcoa. First thing I want to look at, 41.75. So too far. 41.50 is 90 to 42.66. Ooh, either one of those. Either one of those sounds good. Let's take a look at the charts on this. All right, even though it's a nice premium, it's going to be a no. Okay, look where the 30-day high is. Okay, a little bit of pullback. That's not far enough of a pullback. It's way too close. And you have all this space. Look, here's a 30-day bottom here. It's the escalation to your 30-day high. Nice. A little bit of a pullback. That one has that uncertainty written all over it. There we go. Got over 100 views again. Yay! It works. PFE. You want to take a look at Pfizer? PFE. All right, Pfizer. All right, so that's Alcoa. Doesn't look that promising. Sorry. Even though the numbers do look good. It's never a question of do I like the stock. It's just like, is it the right time to buy it? NIO. Somebody want to take a look at NIO for a reason. Okay, now I'm kind of curious. Can a stock that pays $4.84 have 20 years of increased dividends? Seriously. Coney, C-O-N-Y. Never heard of them. C-O-N-Y. All right, so let's take a look. 484, the 5's going for 12 cents, which is a nice premium.
Look at the chart. There's the high. Here's the low. Here was it. Here is it. That looks intriguing also. But I'm confused. I want to take a look at Yahoo Finance. And look up NIO. Well, apparently, they don't have a dividend. Dividend forward yield, nothing. EX dividend date, nothing. 1 year target, nothing. Yeah, I'm going to say no to that one. Sorry. Some historical data. Now, what does historical data tell us? Dividends only. There is no dividends in the selected time period. That means this company doesn't have dividends. So why am I looking at NIO? Okay, so when I ask you guys very nicely, you want me to take a look at some of these stocks, can you at least make sure they qualify? Okay, 20 years of increased dividends. Glaxo, JNK, Coin. Coin's a definite no. Glaxo, I've heard of Glaxo before. JNK, never heard of that before. GLAXO. Is that right? Did I spell that right? Yeah, Glaxo. And JNK. Sounds like junk. Why the hell would you even think about buying something with a ticker symbol that's junk? Is that right? ICST? Or KST? Oh, IGT. Oh, can't read my own writing. That's terrible. GSK is a symbol. Immaterial midstream. Thoughts on Alta. It went down recently. Okay, I've never traded Alta, ULTA, or SVOL. Both of those are no. Sorry, I hate to say no to people, really do, but I wonder sometimes, what were you thinking when you bought something like that? Let's take a look at SOL. Is that right? SOL? SVOL. SVOL. Okay, number one, it's a monthly. Okay, which means I can only do it 12 times a year. Maximum I'm going to get is 24% a year. Doesn't really thrill me. Okay, let's take a look at some history. What am I looking at? SVOL. SVOL. All right, so SVOL has only been paying dividends since September of 2021. Okay? And there's no consistency to the dividends. 26, 35, 29, 36, 39, 34, 37, 33, 32, 32, 32, 35, 32, 30, 30, 31, 30, 30, 30. Yeah, there's no consistency to this whatsoever. That's one thing I don't like. Let's take a look at one more thing. Well, we're going to take a look at two more things, okay? I don't mean to be rude by my back to you, but two more things. Here we go. Well, believe it or not, this is the highest rate of return I am seeing in weeks. Yield 16.49. That's the best one I have seen. Seriously, 16.49. Year-to-date total returns, 14.9, but then again, we're only in a little bit into 1/4 of the year, and you're almost at 5% so far. Not bad. Expense ratio, 1.16, okay, but it still doesn't come close to 50% per year, all right? So, one more thing. Let's go take a look at holdings. What is actually in this fund? Okay, AGGH, Buck, Simplified Stable, whatever, CDX, MTBA. I never even heard of any of that stuff. So it's one of those companies, first of all, is paying 16%. Okay, great, fine, dandy. However, they're not consistent with their dividends, all right? And they have monthly options, which means I can only do a covered call once every 12 days. I mean, once a month. That's it. It's only 12 times a year. It doesn't really count it for me, all right? So it doesn't really fit into the category of what the hell were you thinking, because it's paying 16%. That's nice. Okay, and it pays every month. But it's only been paying for like 4 or 5 years. What the hell is that all about? Bristol Myers Squibb. I think Macy's performed well. Yeah, Macy's does well. Do you also do fundamental analysis? Yeah, Adrian. Before any stock can get onto my list, I do all the fundamental analysis to make sure it's a good company and make sure the book value is not way overreached by the stock price. Okay, so I've seen some stock prices that are 10 times the book value. I don't like to go more than 2 times book value. Well, what does that mean? Well, it means if you liquidate the company, this is what you're getting. How do we get your list? You join the morning crew. Morning crew, every morning we trade. Monday, Tuesday, Wednesday, Thursday, 9 a.m. until around 10:30. Okay, you watch me do my trades. My trades look exactly just like this. Hold on a minute. Okay, my trades look exactly like this. Every week. Okay? Sell 22 WBAs, 54 cents. Ooh, that's a nice fat chunk. Bitto, buy Marvel, buy JD, buy Wells Fargo, Ford. Sell 19 contracts at Comcast at 31 cents. Shit. This is what my trades look like on a daily basis: Monday, Tuesday, Wednesday, Thursday. What about Friday? Well, Friday we jump online at 3 o'clock. Why? Because most of my buying is on Monday. Okay, I buy on Monday, I sell the covered call, and the covered call expires on Friday. So I want to see where it's going to be on Friday. So that's me for 5 hours a week, looking over my shoulder, asking whatever questions you want. So if you think 50% per year is good, fine, we'll join the morning crew and you get all that information. I'm a nice person, but I got to draw the line somewhere. And besides, if you have no skin in the game, how do I know how serious you are? That's the way I go for that one. Sorry, dude. All right, so I like it, I don't like it. Okay? Now, it is an ETF, electronically traded fund. It's got a 1.31 management yield on it. So you have to pay like 1.1 fees. And it's offering you over 16% a year. And it pays monthly. If you like that, me, it doesn't work. Pepsi. What? What's the cost for the morning? It's $100 a month. Let's take a quick look at Pepsi. Now, I usually don't buy Pepsi. Okay? Now, the reason I usually don't buy Pepsi, 178.20. The 180 is going for 42 cents. The 177s are going for $1.50. Coca-Cola, Pepsi, they know they're king shit. They do. They know they're the cream of the crop, and they don't have to offer decent premiums, and they don't. Okay, they just don't offer decent premiums at all. BMY, Bristol Myers Squibb, BMY. 42.28, 41.50, 38 to 41, losing 28. Nope, neither one. Sorry. It is actually that easy, that simple way. You just, what's a good stock that you like? Do the numbers work? Now, I'm not saying don't buy it, because at the 41.28, the 41.50s are going for 30 cents. So what does that come to? So you take your profit, which is going to be your 30 cents, you divide it by the purchase price, 41.28. Okay, so you made 0.7%. Okay, multiply that by 52 weeks, because there's 52 weeks in a year. It's still 38% per year. It's really not that bad. Okay, but make sure you're doing it with companies that you actually like. Don't ever buy a company you do not like, you do not understand, or you do not comprehend. Just don't do it. It just doesn't. It's just not worth it. Wow, this phone gets hot. I don't know why that phone gets so hot. All right. Hopefully that makes sense. Coney pays over $2 every month. Oh boy, I'm gonna take a look at Coney and disappoint you. Usually when people try to justify their buying something, it's usually not a good thing. All right, a couple of reasons. Number one, it's a monthly. Okay, I don't do monthlies because I can only do it 12 times a year. If I'm collecting 1% per week doing a covered call, and I can only do it 12 times, that means I'm only collecting 12%. Why would I do it? Heinebeck. Anything interesting on the list this week? Oh, of course. Hey, Champ, haven't seen you in a while. Yes, there is. You got to tune in, catch hold of it. What you're missing is the yield is much higher because the oversold situation and new pipeline. Interesting. Yield on 52 weeks is much higher. Not quite sure I'm understanding you correctly, because from what I understand the yield is figured out from the instant you buy it. Okay, so once you buy it, let's say $23.74, you look at what the dividend is, or what the, hold on a second. Going to the summary on this one. All right, this one's even better. This one is paying a 25 year-to-date total return, 25%. Okay, we're almost into a little bit past a quarter. Okay, so we're halfway through the second quarter. Okay, so 25%, he's on target for close to 50% for the year. Okay, that's great. That's year-to-date profit and loss. The expense ratio is 1%. Let's check out what kind of dividend they pay. Historic data, historic prices, dividends only, and we want to go to the maximum amount of dividends. Oh, hold on a second. Am I reading this right? 2 years? Not even 2 years. October 23, it hasn't even been 1 year yet. They're paying out fat-ass dividends. Look at this, $1.21, $1.08, $2.46, $2.69, $1.08, $1.66, $2.79, $2.28. Not even a year's worth of dividends, and the numbers are freaking crazy. And they're up over 25% already. Yeah, it sounds wonderful, it sounds great, but they don't even have a year's worth of dividends. Okay, if you like it, fine. I like safety. I like predictability. How the hell am I supposed to figure out where a stock that's only a year old is going to go? I mean, it looks interesting. Now look, you got your high, you got your low a year ago, and where we are now. She goes up, down, up, down, up, down, up. Where the hell do you think she's going to go next? She's going to continue going up. Well, of course it's continue going up. But it's a monthly, $23.74. The 24s are going for 45 cents, but I have to hold it for 4 weeks. That's not even 0.5% a week. Well, okay, great. If I'm doing it 0.5% a week, that's 2% per month, so that's 24% per year on the covered calls, and it's paying 24% yield so far. Well, yeah, so far. It sounds great if that's what you're into. But I like companies that have been around for a while, that have historical performance. I have no idea if this company's going to be around in the next 3 to 5 years. That's the risk you're going to take. Higher rates of return, higher risks. I'm only trying to grab 1% on all big companies. Did you do McDonald's? No. What stock are you talking about? I'm talking about something I would never buy. CONY, Yield Max. It's only a year old. How the hell are you supposed to figure out where it's going to go? I mean, it's. Don't get me wrong. It would probably be great for a younger crowd. Put a couple $1,000 into it, leave it alone, see where it is in 20, 30 years. I ain't got that time to wait. I live off of my interest. There's no way I'm putting, $10,000 into a company that I have no idea what the hell they do. Number one. Number two, they have no history. This is pure speculation. What the hell's going to happen with them? I don't know. I'm not putting my money there. But for a younger person, yeah. Let's throw 10 grand at this, see what happens in 20 years. Yeah, no thanks. But that was Coney. I'll write that one off the list. FL, we looked at that one. BGFV. I didn't think we'd get to this one tonight. BGFV. All right. Did we say no to this one already? I said we'd take a look at it. Well, we're taking a look at it. BGFV. Big Five Sporting Goods. It's the monthly number one. $3.25. She's at $3.22. She's bouncing off of the bottom there. Yeah, it's not one that I would do because I almost guarantee they don't have 20 years of increased dividends. And another one is I've never heard of them before. Okay, I don't buy stuff that I don't understand. Because if I'm going to buy something, I'm going to go buy it with the intention of holding onto it for a long period of time. Yield Max, our new family for high dividends. Yeah, but that's a game I don't want to play because, like I say, I rely on the consistency and predictability of the 1% per week that I'm gaining on a weekly basis. I don't want to, tilt the apple cart. Oh wow, we're only at 10:30. We got another hour to go. Well, alrighty then. Let's take a look at the next on the list. What about Toyota? You actually have to give me the ticker symbol, and Toyota's not on my list, so I don't know what that ticker symbol is. MPW. Somebody want to take a look at MPW? Here we go. MPW. Oh, look at that. I actually have some MPW. All right. First thing I want to look at, what can I buy it for on Tuesday? $5.06. The $5 is going for 18. You subtract that 6, so now I'm only making 13. 13 cents is more. It's like 2.5%. 2.5%. That one. I think that one is on my list for next week. It is now MPW. Okay, so we know that the numbers work. Let's take a look at the chart. Let's move this over. Move it on over. I just slide it on over. Move over, cool dog. Hot dogs. Moving in. All right, so here's my high of the year. $10.60. Here's my low of the year. $3.30. Sliding up this direction, we get a high right here, and $5.04 was the last trade. All right, that's the last 90 days. 90 days ago was the 90-day bottom, way over here. Slide went to the upside here. Look at that escalation from there. Nice. That is a nice direction. Very slow, very steady. I like slow and steady. And slow and steady gives me 1% per week. I'm perfectly okay with that. TM, you say. We'll take a look at TM. All right, we'll take a look at TM in a little bit. Okay, so now I want to take a look at the last 30 days. Why? Why the last 30 days? Well, in order for me to figure out or get an idea of where it's going to be on next Friday, because if I buy this on Tuesday, which the numbers already told me it's a good deal, the numbers were. Now I'm checking out the charts to make sure the numbers
the numbers and the charts both work. Because once they both work, I like to have the odds and probabilities in my favor.
All right, 30 days ago, 460. Bottomed out at 420, looks like. Shoots on up to 660. And then drops back down again. Look at the bottom here. And then we're up to the upside.
Okay. It's on my list for Monday. AMD. We already looked at AMD, and AMD was a no. Sorry, brother.
AMD is a no.
All right. So that's MPW.
Now, what does the MPW usually do this time of year? Let's take a quick look at the seasonality. Basically, the blue line is this year. The red line's 10 years worth of data.
This is basically going sideways. It ain't going anywhere. Not going anywhere.
We're going to jump in and take a look at what's next. What's next? Microsoft. Really? MSFT. Check it out, 430. 430.
325. That means no. When does MPW pay dividends?
Ooh, Doc, good question. MPW. April 19th. That was a couple of weeks ago. That was a lot of weeks ago. So why are we still buying this thing? I don't know.
Doc, the way I look at it, if a company's going to give me 2% per week, I really don't care when they're paying up their dividends. You know, I use the dividends as a precursor to tell me when to buy. But if I find a certain set of stocks that continuously give me 2% per week, I'm going to buy those. It's actually that simple. And I like MPW. All right, so Microsoft is going to be a no. Okay, 430. Let's go for 325. That's not even 1%. No, sorry. BMY, Bristol Myers Squibb. BMY. Now, here we go. Bristol Myers Squibb. 41.28 to 41. It's going for 55. Take the 28 off that. It's going to be a no. Sorry. The numbers just don't work. Not for this week anyway. Ooh, Pfizer. Pfizer, PFE. Now, Pfizer usually has good premiums. PFE. 28.91. 28. Well, look at the 30s. 6 cents. But look at this. The last traded price, 28.88. 20. Yeah, so the 29s. Yep. Not worth it. Sorry. Dell. 160, 190, the 162s. That can't be right. Oh, yeah, sorry, it's a no. Darbenley. Is that right? Darbenley? All right. The number, 161.90. Look at the 162s. $7.80. That's freaking huge. Do you know why? Look at where it is. It's at the high of the year. Hey, I never buy at the high of the year. That's an automatic no. Sorry. I'm not buying at the high, waiting for it to go higher. Because there can only be one high. And I'm not. You got 266 days. There's 266 trading days in a year. Not 365. 266. 265, 266. Something like that. Depending on the year, of course. But anyway, 266 trading days.
only one can be the high, and only one can be the low. So the odds are 265 to 1 for tomorrow to actually beat that price. 265 to 1. Yeah, I don't want to take that much. Because it can only be one high. And at the moment, it's this one. You may think, okay, that tomorrow it may go higher, it may go lower. Yeah, but the odds are it's going down. Okay? All right, anyway. So that's a no. Coney was a no. Glaxo. Glaxo. I can tell you it's a no right now. Glaxo. GlaxoSmithKline. All right. GlaxoSmithKline, I have heard the company, they have no options available. So they're a no. Oh, somebody wanted to take a look at JNK. Darnby, we were going to look at, yeah, we looked at NIO earlier. I don't know if the consensus was on NIO, but Dell's a no. We already took a look at that number. What am I looking at? JNK. Are you really kidding me? JNK. That's another ETF. I normally don't do ETFs. 94s. 94.50. Yeah, there's no option premium here whatsoever. Look, right now it's at 94.30. The 94 is going for 30. You get nothing out of it. 94.50s, 5 cents, ain't getting out of that. But look at the next one up, 0000. There's no option. There's no option audience. There's nobody buying it. There's a bond fund high yield. Thank you for your streams. Hey, Horizon Smash, way to go. Thanks. You're welcome. How's that? You're welcome. All right, so what am I looking at now? Yeah, JNK is going to be a no. It's a high yield bond ETF. I just don't like the numbers. They're just not working out. All right. Toyota Motor Company, TM. Yeah, that thing's spotty. Number one, it's spotty. Look at this. Spotty. Not really trading very well. 221. The 220 is going for 370. Wow. And it's only a monthly. So whatever that profit's going to be, I'm losing $1, 270, just over 1%. But that's like no audience. And then I got to hold that for 4 weeks. It's like 1% for 4 weeks. I don't do monthlies. They just don't pay. Sorry. All right, I'm going to call it a night. The audience is kind of thin. I'm getting a little bit sore. I'm not doing that bad after just 2 weeks. I can move it around quite a bit, so I'm happy about that. I will do one more AT&T, and that will be it for the night, even though I don't think AT&T is going to be that preferable. 1750, 12 cents. Not even making you 1%. But if you like AT&T, let me tell you what AT&T will give you, even if you take it at the money right where it is. Clear. The 1750 is going for 12 cents a share. 12 cents a share, you divide it by the purchase price, 1750, that equals that. You multiply that by 52 weeks in the year. This is just rough. It's still over 35% for the year, if you think of it that way. Okay? All right. GPS. We'll do GPS tomorrow night, okay? I'm starting to get a little sore, a little tired. And, as soon as this drunken drug phase is gone, I can be able to think more clearly. All right, all that being said, you guys will catch you again tomorrow night. And now.
dividend investing for weekly cash flow for safe, secure, predictable 1% per week, period. That's over 50% per year if you do it correctly. And this was created for a 9-year-old little girl, so you should have no problems. All right.